What's up, guys? Welcome back to the channel. The Dixie, the DXY, is ripping to the moon. It is like on a rocket ship. It's up 109 today. We're seeing silver drop. We're seeing gold drop. We're seeing oil drop. We're seeing stocks drop. We're seeing the bond market about to implode. This is key to watch. When the bond market has a spike in the 10-year yield, when the yield on the 10-year bond goes up, that means that there are more sellers than there are buyers. That is money leaving the bond market and it is going somewhere else. The question is, where is it going? It appears with the Dixie rising that it's going to the dollar, that it's going to cash, it's going to the safe play. This is important to understand because the entire world's financial system is laced with dollar debt. So the US went out, won World War II in 1944, bombed all their competitors, the Japs, the Germans, Britain got hosed. I mean, all of our competitors got just annihilated in World War II. We built factories and had nothing bad happen over here. All of our competitors get knocked out. We become the biggest producing nation. We also win World War II. We write this script and we say, look, US dollar is going to be the world reserve currency. We're going to back the currency with gold, as it already is. It's even better than gold because you can buy treasury bonds and you can get interest on your gold. So it's like owning gold, but getting interest on your gold. It's America, baby. You're gonna want some of that. And that's what we did, and that worked fine all the way up until 1971, because when you have the world's reserve currency, you have to always make sure that you're creating more currency, that more currency is going out into the world. And so as the world economy came back online, the Japanese started to produce, the British started to produce, the Germans started to produce, we had to dollarize the world. Well, the only way that we could do that was to take on debt. So at some point we had to break the gold standard. In 1971, we had to back with something new, and we backed it with petroleum in 1974, but we held it to a price denominated in gold. And this is the thing that changed this year in 2022. This is the part to catch. We kept the price of oil adjusted for gold at $10 to $15 of gold per barrel from 1974 to 2021. And then in 2022, early 22, we allowed oil spiked, and we did not keep the price of oil and the price of gold relative. And so oil now priced in gold ounces would be $18 a barrel. We broke that $15 top substantially, 30%, 15% above it, right? And no end in sight at this point in time. That's key because the world needs US dollars because oil is still sold in dollars. And so because it's sold in dollars, countries like Colombia, countries like Japan, they have to trade their currency to get our currency to buy the petroleum that they need. Well, if you're in Japan, the way that you do it is you print your yen. You just print yen, which creates more supply of yen, and you buy dollars, which creates demand for the dollar. So the demand for the dollar goes up, the supply of the yen causes the yen to go down, and it's a vicious circle in favor of the dollar. Here's what's key to catch. At the end of it, because what is keeping the value of the dollar up was gold. We broke that. Then it was oil, backed up with the US military. Oil and the US military industrial complex are a unit. They are a married entity. Well, we broke that this year when we went to $18 gold priced, $18 barrel of oil priced in gold. I'll break that down more in another video, maybe put up a whiteboard up here and kind of break it down so you can visually see it. But if you look at the price of a barrel of oil, you look at the price of gold, and you divide them out, you'll notice that it'll take $18 US dollars to make up a barrel of oil. So the world needs this. It's the basic building block of energy worldwide. And so what has occurred at this point in time is that we've broken that. And what is keeping the demand for the dollar up is not just that people need dollars for petroleum anymore, but we dollarize the world and we put dollar debt all throughout the world. And so the whole world, whether you're Brazil or India or anywhere, you need dollars because you got to pay back these dollar loans. So what will happen is countries like India or Brazil, Argentina, they will continue to print their currency to buy in exchange for dollars to pay back their dollar mortgages, if it will. Well, as their currencies become valueless and the dollar becomes more valuable, they have to print more and more. It's this vicious cycle that I alluded to earlier. The issue becomes when you bankrupt your client, when you bankrupt these other nations and they go, we tap out, we can't do this, we can't do this. And they default on that debt. The moment they default on that debt, that floor that holds the demand for the US dollar goes away. The gold back in the US dollar is gone. The petroleum back in the US dollar is not there and kept in line. And the demand for the US dollar, when people default on their dollar debt, goes away. And that creates the biggest issue in American economics that has ever existed. And that is the spot. This is the reason I created this channel. I see this coming, and I'm like, this is gonna be like epically terrible. Like this is gonna be healthy long term because this too shall pass. But in the very short term, this is going to, in short to midterm, I mean, this is gonna be rough, super rough. Also, JP Morgan said, gold is money, everything else is credit. For the last 52 years, 51 years, Americans have believed that the US fiat dollar is an actual thing. And it is today. But at some point in time, that floor of debt holding the US dollar afloat, holding the US economy afloat, keeping the US new car market working, keeping the housing market going, keeping the consumption of the American consumer, allowing the Americans to print dollars and import stuff from the world is going to be up. It's going to be like a game of musical chairs. It's all going good, the music stops, find a chair, game over. And that's what's happening. That is why it is so freaking imperative that you are investing or saving in gold, in silver, in commodities, and you're getting prepared for this. Because what's going to occur is that BRICS nations, Brazil, Russia, India, China, Saudi Arabia, and then the other S. The other S, it's not Saudi Arabia. The BRICS nations. Are in the process of figuring out how to get off of the US dollar, as should we. And when they do get off of the US dollar, they're representing 3.4 billion people. They're representing more than like half or about half of the world's population amongst those countries. They're representing way more than half of the world's production in commodities, like whether it be grains, oil, uranium, coal, steel, aluminum. They're representing way more than half of the production of all those materials. And when they change how they price those materials and in what currency they price them to, it will likely be a basket of currencies that will be represented. And gold will probably be the biggest piece in there. There might be oil in there, there might be other things, so these other nations can trade and have a balance of trade, not just the US printing a currency and importing stuff and exporting almost nothing. It'll instead be we export grain and we trade for commodity currency, and then we use commodity currency to import oil, and all the prices will balance and they'll come into line. But the US will get the short end of the stick because we will get absolutely, completely screwed at the very end. So the thing to understand about the dollar milkshake theory, Brent Johnson's theory, is that it's great for the dollar while you have this dollar demand. But as you're eroding the value of the dollar here at home, and as the BRICS nations are starting to do something very actively about getting off of the dollar, eventually that floor, as the dollar becomes so strong, is unpayable. And when it becomes unpayable, that debt just gets defaulted on. And when that debt gets defaulted on, the value of the US dollar goes up in smoke. And that's why we will have a Fed coin or some sort of digital or an IMF. It's all up for debate. The Bitcoin guys are like, yo, it could be us. I hope so. I'm down for some Bitcoin. I like the idea of a fixed rate currency. And as technology makes things cheaper and cheaper and cheaper, as we can produce more with less, the currency stays the same. It can never change. And the value or the stuff in the world goes up as far as quantity of stuff. So therefore the price of everything goes down. I'm about that, right? Because even the poorest are going to get the benefit of that. Right now, technology makes things cheaper, but we don't directly see the results of technology making almost everything in our world cheaper because our political elites print just enough to take that. and take it, and they've got everybody hooked on the dollar. So I hope you guys got some value of it. Please give me a comment down in the bottom. Let me know what you guys thought of this. Give this video a like, share it with somebody that might get a ton of value out of it, and be like, yo, check out Trav's stuff. It's pretty good, you know, let them know, like, hey, you know, you guys should learn this, because the 2020s, we're going to see all of this come together, and it's most likely going to be pretty crazy. It's gonna be pretty freaking nuts, because the unit of account and the scales, the weights and balances, if you will, are off kilter, and we're going to see them come back in line. And for the US, that means that we will have to export more than we import. And currently we import way more than we export. The delta between will be an 80% deficit between our standard of living now and our standard of living later. And for you guys that are investing in silver and speculating and pushing it into gold as the ratios come back into line, you will probably see an unfair wealth advantage over those that miss that opportunity. And I want to be able to help you guys out. My email is below, Travis@lightcapital.com. I sell silver and gold and platinum. I'd love to be able to help you out if I can. And until next video, see you guys below.